This is Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Start of a new week, Monday morning. We are coming to you as always from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me as always, my colleague Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel. And it's been great going for the market. The start of a brand new week. Lots to look forward to. So let's get rolling.
Well, that's right. And an eye on the cricket match as well. India in the first half of trade, so to call it. We may get home in that test match against England. Big comeback yesterday. People were ruling us out on Saturday night. So I'm pumped about that. But I think we need to track the markets.
Absolutely. And, it's going to be a okay-ish kind of start, I think, because we left off on that kind of a note on Friday. Both here in India, where the market sort of actually gave up some of the gains. We ended about 0.25% lower. And, of course, in the US as well. So let's just quickly start there, right? I mean, just a word on how we left off on Friday. So things cooled off. It was a good sort of week. The index, for example, was up about 0.75% Friday to Friday. Mid-caps were higher, small caps not so much. Banks, I mean, one half was good, the other half not so much. So, but broadly, I mean, if you just gauge things by what the Nifty did, it was up about 0.75% or so. But on Friday, it was a bit of a cool-off, which we saw. US has not really thrown us anything big. S&P is flat. The Nasdaq is down about 0.25% or so. But big move in yields. And I think this is just profit booking, nothing else. I mean, the yields cooled off about 7 basis points to 4.25%. There was no big data at all. I mean, earlier in the week, you had the CPI number, the PPI number, you had, jobless claims, etc. But on Friday, there was nothing. But markets, I think, saw some profit booking on the rate side. The Fed rhetoric, and this is, of course, going to dominate, it continues to indicate that it will take an unhurried approach to cutting rates. I mean, there's no immediacy to do anything because, labor market data, especially labor market data, is coming in pretty strong, right? So the low jobless claims, which we got last week, suggest that you've got a pretty healthy labor market still. There are many who argue that other data points are slowing down. It's a matter of time before this one data point, the labor data, starts to show up as well, starts to slow down as well, but it needs to. Now, this week, we get the PCE number, the January PCE number, which is the most important inflation gauge, which the Fed watches. There is a CPI, but there is the PCE number, which we get as well. And because the CPI and the producer price index, etc., has been strong, expectations are that this is also going to be elevated. It's going to be firm. Now, oil prices sold off about 2.5% on Friday. We are at about 81.5, so that's good news. It kind of leaves us in no real sort of big directional cue, so as to speak. So the market here in India has largely negated any sort of one-day shakeouts, etc., like what we saw last week, right? Wednesday, we got a big shakeout, and then the market just moved on. So the targets remain 22,500 on the upside. And what has worked basically is to try and buy the dips whenever they appear. And it's even better if you try and buy near support levels. So, for example, last Thursday's low is 21,875. That's the low for the week. And I would imagine that that's the first kind of support which the market will, if you're trading, I think that should be the stop that you need to place. 21,875 is that number. Nifty Bank is still below its previous high of 47,363. Supports there come in at 46,270, which is the 40-day exponential moving average, and then 46,011, which is the 20-day moving average this morning. I think the GIFT Nifty is indicating a flattish kind of a start, so no real fireworks at all. I mean, 6 points lower, but a slightly bigger sort of dip at some point during the session gives opportunity to get in because you get those rebounds inevitably as well. Sonia?
Absolutely. I think we got our fair share of the fireworks last week, right? When the Nifty hit record highs for 5 consecutive days. So looks like that's something that could continue over the course of the next few days as well. Now, one thing is clear that this is a buy on dips market. And that's the strategy that's been working for a while. So it looks like it could continue today as well. There was large buying from foreign investors, and this is unusual because through the course of February, you've got buying from domestic investors. The FIs have not come back in a big way, but on Friday, the foreign investors came back, almost 1,270 crores of buying from FIIs, and the domestic community has been pumping in money thick and fast. So DIIs have bought almost 21,000 crores in the cash markets in February so far. So that's been looking pretty good. As I said, the buy and dip strategy is something that's working, so I'll keep an eye out on that. In fact, in spaces like PSU banks, for example, names like SBI, a couple of other PSU banks. Motilal Oswal has come out with an interesting note this morning where they reiterate their buy on names like SBI despite the rally that we've already seen. So if you're looking to buy the dips, perhaps some of these spaces like PSU banks should draw your attention again. A couple of things to watch out for. There is some data that we're looking out for. Prashant mentioned some of it. But in the Indian market, on the 29th of February, you have the fiscal deficit data, the GDP data, the core sector data that's expected this week. So all eyes will be on that. And in terms of individual stocks on the downside, I'm watching out for Asian Paints. Because remember last week when Grasim announced their paints business, Asian Paints was under pressure. Brokerage downgrades continue over there. In fact, this morning, CLSA has downgraded Asian Paints to a sell. They've cut their target price to 24.25, which is a big downside to the current market price. So keep an eye out on those stocks. But looks like the going is good and the buy on dip strategy continues.
Well, that's right. The buy on dip strategy should continue, Sonia. And what a series it's been, right? Yeah. And this week we're going to be having expiry that plays out. So it's going to be quite interesting. Let's tell you what the FIs did, though, in Friday's trading session. They lighted some positions, both on the long as well as the short side. They continue to remain net short with the positioning at around 56% odd. The PCR, though, that's come down closer to around 1. Remember, it had moved to around 1.2. That's telling you the kind of call writing that we're seeing. That was quite aggressive. So the 22,300 call, the 22,500 call. Between them, they added more than 55 lakh shares odd. So there was aggressive writing being seen at both those two strikes, telling you that the bears believe that they can defend this particular range. That's what they believe. And they've been wrong numerous times in the series. Let's see whether they get caught on the wrong side. Well, the Nifty, actually, the chart should come up for you. And if you look at a reference point on the downside, the 20 DMA, that's the one, that's the first one at around 21,880 approximately. So that's crucial. Going by the options data, going by the technicals, you'll see the near-term support is at this 20 DMA, or you look at it at around 22,000 odd mark, since it's a rounded off number. While on the upside, the bears believe that they've got this covered, at around this 22,350 to around 22,500 going by the options data. The Nifty Bank, that's pulled back well, but that seems to be facing some resistance in this vicinity of around 47,100 to around 47,500. And I say this because the last few trading sessions, it's going to that mark, but it's not able to decisively conquer that. So you'll want it to see, the Nifty Bank go ahead and conquer that 47,500 odd mark. The GIFT Nifty is more or less flattish to kickstart trade, so it gives you a good entry opportunity if in fact you do see a bit of a dip. The stock that I'm looking at is Biocon. Last week it was a bit of an underperformer. It showed signs that it wanted to run away to around that, close to around that 300 rupee odd mark. But in the last week, it went closer to that mark, and in fact, it came down lower as well. So it's corrected closer on 7% from the recent peak. But if you plot the lines, you look at it, it's coming towards the 20 as well as the 200 DMA, which is in that vicinity of around 250 to around 270. So, it should hold on to this level. The chart's looking quite interesting. If it can hold this level, let's see whether or not it can bounce back. But I'll keep an eye out on this stock. On the charts, it's looking quite interesting. Let's see how it goes. Expiry week, the bulls will feel they're in control.
All right, it's a big expiry week. The markets are at record highs. In fact, most global markets also are at record highs. As we speak, the Japanese market continues to be at fresh highs. So there's lots to watch out for as we begin a brand new week of trade. But as we kick it off, let's get you some opinion from Sayan Mukherjee of Nomura. A little bit of cautiousness in his tone. He says the positive narrative of the macros and earnings is largely priced in, and hence they are selective across sectors. They have replaced IndusInd Bank with SBI in their portfolio given the prevailing tight liquidity conditions and valuations. They've also assumed coverage on industrials where ABB is the preferred pick. Gujarat Gas and Gland Pharma are added as the least preferred names, and Zomato has been removed from this list given the recent change in the stance and stock valuations. Nomura's top large cap picks include SBI, ICICI Bank, M&M, Reliance and L&T. From the mid caps, top picks are Lupin, MedPlus, Fortis, Sansera, Dalmia Bharat, Federal Bank, Voltas and 5-Star.
All right, let's get you some money market views. P. Prasanna of ICICI Bank says the dollar consolidated gains as rate cut pricing gets pushed back due to strong economic data. He says rupee performed better than its peers on the back of debt inflows and narrowing current account deficit. However, he adds RBI's intervention mopped up the dollar, which kept the rupee in a narrow range. He's expecting the rupee to continue to trade between 82.75 to 83.15 for the week.
All right, and on the bonds, V. Prasanna says as early rate cut expectations keep diminishing, global yields continue their hardening bias, albeit with some emergence of value buying. Back home, he says yields remain supported owing to strong investor and FPI buying. He says absence of GSEC supply and lower SDL borrowing than scheduled augurs well as year-end demand is likely to continue. He expects range-bound movement with the 10-year benchmark bond yield likely to trade in a range of 7.02 to 7.12%.
All right, Ed Yardeni is with us, President Yardeni Research. Ed, good to have you with us here. As always, appreciate your time. Just want to start with what we're seeing in China. There's a bit of a rebound. And as we've seen over the last 1.5, 2 years or so, some of these rebounds can be pretty sharp, 20, 25%, 30%, at least two of those in the last 2 years. Do you think we're in the midst of one of those, or this is going to fizzle out faster?
Well, I think we may very well be in the midst of one of those, but they're really for traders. They're not for investors. I think investors have lost confidence in whether you can even invest in China, given that the government seems to oscillate between embracing foreign investors and indicating that they want to have more control over business. So I don't think that this is going to be a major trend change in the Chinese market. And I think that rallies should probably be sold.
Okay, rally should be sold into interesting. Ed, hi, good morning. For the Indian markets, though, buying every dip has been the best strategy this year so far, actually in the last one and a half years. You think that's going to change anytime soon?
Yeah, it's just, India's had an extraordinary run. And I think the fact that you were reporting that foreigners are coming in maybe more aggressively into the market. On the one hand, that's a good sign. That's a sign that foreign investors are doing more homework on how things are going in India, and they're concluding that it's a good, safe place to invest. On the other hand, sometimes foreigners can be contrary indicators when they come in. Sometimes that gets you near the top of the market because they are sort of late in recognizing bull markets. So I think that the fundamentals still look quite good. It's just a question of evaluation.
All right. Hi, Ed. Morning and good to see you in. What do you make of the big move we saw in NVIDIA? And those Super 7 or so to call it, there seems to be some narrowing out there because they are accounting for bulk of the gains. Do you think they're getting a little bit ahead of themselves? Do you think, look at the numbers, look at the company that's coming in. It's going up with good merit.
Yeah, no, it's been extraordinary. And for those of us who've been around for a while, it's sort of reminiscent of what we saw happen in the late 1990s in the U.S. stock market. And it's very reminiscent of the way that one of the biggest stocks, Cisco, went straight up during 1998 and 1999. And it was a good company with good solid earnings. And it was the major provider of equipment for the internet. So there's a lot of good reasons to own it, but then it came crashing down subsequently. I'm not predicting that for NVIDIA, but I'm watching out. I wrote a article just the other last week, which was titled "Artificial Intelligence Isn't Intelligent," and so I'm a little skeptical about whether artificial intelligence is ready for prime time. I think it will make a difference over time in productivity, but it's got a long ways to go. And investors seem to be getting a little bit ahead of the fundamentals.
Okay, I guess some amount of caution is always prudent. Ed, thanks a lot for joining in and giving us your thoughts. That's Ed Yardeni of Yardeni Research. Let's slip into a quick break. On the other side of the break, our list of top 10 stocks is lined up. Stay tuned.
तीनों को
Welcome back to Bazaar Morning Call. Well, there are plenty of stocks in focus this morning as we begin a brand new week of trade. Our research team is with us to give you the list of top 10 stocks. So let's kick it off with some banks. Now, HDFC Bank and Kotak Bank on our radar. Abhishek is here to give us the latest. Abhishek, over to you.
Good morning, Sonia. So SDFC Bank over there, RBI has approved stake sale in SDFC Credila, wherein the bank intends to sell about 90% stake. As of FY23, Credila had a total income of 1,352 crores with a PAT of around 276 crores. Their outstanding loans that grew by 73% YOY, while asset quality improved as gross NPA value was down 50% YOY. In Kotak Bank will sell 70% of Kotak General to Zurich Insurance Company. Earlier, the transaction was to happen in two tranches of 51% and 19% over the next 3 years, but now it's happening at one go. Total consideration is about 5,560 crores. Jefferies has written a note. They have a hold rating and a target price of 2,050. They say that this business is small, 0.5% of the premium market share and 0.3% of the net worth, and it had incurred a loss of about 160 620 crore in FY23. Valuations are unchanged with respect to post-money. The market cap would be around 7,900 crore and higher than their own SOTP, which had valued this company at about 5,400 crore. However, this implies, just 1% to the SOTP due to the small size. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, Vamakshi joins us to tell us more about Reliance and Disney deal. Morning, Vamakshi.
Well, morning, Nigel. Reliance Industries, as per Bloomberg reports, has signed a merger pact with Disney, and this is to merge their media operations in India. The deal is likely to be announced early this week. Now, keep in mind that we have not verified this report independently, but nevertheless, the report suggests that RIL's media unit and its affiliates could own at least 61% of the merged entity, while the remaining will be held by Disney. The stake split, however, may change depending on how Disney's other local assets are factored in. Now, moving on to the valuation, then, as per a recent report by Wall Street Journal, the report suggested that the deal could value Disney's India operations at nearly $3.9 billion or 32,000 crore rupees. And in fact, additionally, Reliance is also mulling over the acquisition of Tata Play Limited, a broadcast service provider in which Disney holds a minority stake. So on the back of this news report, keep an eye out on TV18. I expect it to open in the green.
All right, Vamakshi, thanks very much for that. Well, let's talk about SBI Card, where I think it's not very good news, loss in market share there. And Paytm, on Friday after market hours, the RBI sort of issued a circular, largely to ease transition for consumers. Abhishek is here with the details. Abhishek, back to you.
Well, Prashant, as you mentioned, in cards, SBI cards momentum, it looks like they have lost market share both YOY and month on month. So overall, cards grew by 14.8% YOY and about 0.7% month on month. Spends was strong on a month on month basis. It was up 26.3% YOY and up about 4.9% month on month. This meant that the average spend is up 10% YOY and about 4.2% month on month. In terms of market share, overall cards market share declined to 18.7% when compared to 19.66% in the same month last year and about 18.9% in the previous month. Spends, market share is at 18.4%. It has declined on a YOY basis. Last year, same month, that is for January, it was at 19% and the previous month, it was 17.7%. So month on month, there is gain in spends. In terms of Paytm, RBI has advised, NPCI to be the third-party application provider for UPI channel. So this is to ensure UPI operations of Paytm as per norms. They are awaiting with respect to NPCI's response for this request. And this can remove one of the two regulatory concerns overhangs other than being the ED investigation for Paytm. Analysts do say that Paytm's business model moving towards a pure payment company, and the focus will now shift to smooth transition and rate of user and merchant retention that they get post this news. Back to you.
All right, thanks a lot for that. Well, Dixon Tech is the other stock that we're looking at this morning. Upasana has more details on why you should be watching this one. Upasana, over to you.
Well, the company's wholly owned subsidiary, Paget Electronics, has entered into a contract manufacturing agreement with Compal Smart Devices India for manufacturing of mobile phones. Mind you that Compal is one of the world's leading manufacturer of notebook PCs, smart devices, data center equipments and LCD products. Now, also the company has also launched a new unit in Dehradun for manufacturing of washing machines.
All right, thanks a lot for that. So Dixon Tech is in focus on the back of those that news flow. But Rain Industries came out with their numbers, so let's find out how it looked. Sonal is here with the fine print. Sonal, over to you.
Good morning, Sonia. Well, these were the Q4 calendar year 2023 numbers, and they looked weak. Revenues declined 1.5%. There was an EBITDA loss of 600 crore rupees versus an EBITDA last year of 366 crore rupees last quarter, that is. And the loss came at 1,078 crore rupees versus a loss of 66 crore rupees. Couple of reasons why this loss was higher. There was an impairment loss of 751 crore rupees in this quarter. Even barring that, there would have been a higher loss. The tax expense was higher to 995 crore rupees versus 462 crore rupees on a sequential basis. The company does say their carbon segment was impacted because of delayed shipments. There was margin contraction as well. Their advanced material segment impacted due to seasonal reasons, but their cement segment improved due to better volumes. But overall, it's a miss when it comes to Rain Industries numbers.
All right. Thanks very much, Sonal, for that. Sanofi fourth quarter numbers and Suven Pharma are in focus. Ekta's got details here. Ekta.
Thanks. I'll start with Sanofi. The revenue was up around 3% margins improved to 27% versus 25%, and the profit was up around 5%. So overall, okay set of numbers. Margin improvement will probably aid the stock in today's trading session, not to mention that a lot of these MNCs have been in focus in any case post the Novartis news. Now, Suven Pharma, I expect that stock to be in the green because the US FDA completed a pre-approval inspection and an overall inspection of their API and formulation facilities in Hyderabad. No Form 483 was issued, was inspected from Feb 12th to the 23rd of Feb. So you can expect that stock to be in the green.
All right, thanks for that. Well, Vivek is joining in to tell us about JSW Infra and why you should be watching that one. Vivek, good morning.
Well, good morning. You know, one more order win coming in as far as JSW Infra is concerned. So the company has got the letter of award from the V.O. Chidambaram Port Trust. You know, this particular award is for going ahead and mechanizing the North Cargo Berth 3 for the handling dry bulk cargo. So some more volumes coming in as far as JSW Infra is concerned. This particular award or this particular project will be done through the DBFOT basis through PPP business. That is the design, build, finance, operate and transfer basis. Positive for JSW Infra. The stock has been on a tear in recent times. Some more positive news flow coming in.
Okay, all right. Thanks a lot for that, Vivek. Well, let's do a quick recap of all the stocks we just covered for you. Stocks with positive news flow include HDFC Bank, Kotak Bank, TV18 Broadcast, Paytm, Dixon, Sanofi, Suven Pharma, and JSW Infra. While a couple of stocks with negative news flow include SBI Card and Rain Industries. Well, those are all the top stocks you need to track, but Sudarshan, as always, has gone through various brokerage notes. He joins us to tell us which are the ones on his radar. Morning, Sudarshan.
Morning, Nigel. So first one is BofA Securities on Indus Towers. It is a buy rating. Target is rupees 280 per share. BofA Securities says Vodafone Idea evaluating options to raise funds is a catalyst for Indus Towers, and company can be a beneficiary from Vodafone Idea's network expansion. On valuations front, it says at 5 times FY25 EBITDA multiple, valuations are attractive and risk reward is favorable. Next one is JP Morgan on GAIL. It has a neutral rating. Target is rupees 175 per share. It says trading segment is likely to report strong earnings in Q4 as well, and recent collapse in US Henry Hub prices and stable oil prices will drive trading margin further. Last one is Morgan Stanley on oil marketing companies. It says integrated margins remain strong with gasoline and diesel margins near $20 per barrel, and well-supplied oil market, hardware upgrades and refining golden age may drive earning upgrades further. For Morgan Stanley, HPCL and BPCL remain preferred picks.
All right, thanks a lot, Sudarshan, for that. Well, let's also talk about what's happening in the world of crude. Good for us. Brent crude prices are now below $82 a barrel, actually. Manisha Gupta is joining in to give us a roundup of all the action there. Manisha, good morning.
Morning, Sonia. Well, absolutely. Good news coming in from the crude oil front. The prices still declined 2% in the previous week, and we've started this week 0.5% on the weaker side as well. Well, there is a delay in U.S. rate cuts, and that seems to be bothering. And apart from that, the street is looking at U.S., which has added more rigs since the month of November. So you are looking at a record production already coming in from U.S., and they seem to be sprucing it up even further. The markets, though, are also looking at the travel demand that has come in from China and Japan. That seems to be supportive. The tensions in Red Sea also seem to be adding, but it is a very data-heavy week. You have various U.S. Fed speeches, GDP data, durable good numbers, home sales, all of that coming in from U.S., inflation rates from Japan, Europe, Australia, and then GDP numbers coming in from Turkey, India, Canada, etc. as well. So loads of data, and that is expected to keep the markets jittery.
Okay, thanks a lot for that. So loads of data that the street will be watching out for. But the government has released the All India Household Consumption Expenditure Survey after a gap of 11 years. The survey was done between August 2022 and July 2023. The survey covered 2.6 lakh households all over India, and the key base on which CPI or consumer inflation table is constructed. Very interesting to note the changing consumption patterns. Lata has a key takeaway of the latest survey. Lata, over to you.
Well, I must emphasize the importance of this survey. It's something which economists and policymakers look out for very closely because it gives you an idea of what 2.6 lakh sample households. Now, the key takeaway, if you looked at the survey in 99, 2000, 2011, 12 and 22, 23, which is 11 years, then the first decade, actually rural consumption grew by 194%, not adjusted for prices, this is current prices, whereas the growth is 170% in the second decade. So you may say consumption has grown a little slowly in the second decade. Urban consumption shows a similar sign. 207% growth in the first decade, but 148% growth in the second decade. But this is a vast amount of data from which we can cull out more trends. And one positive trend is if you adjust it for inflation, then 2011-12 to 22-23, rural consumption grew by 40.4%, urban consumption grew by only 33.5%. So clearly the rural-urban gap has narrowed. In fact, there is a number to it. The gap used to be 83.9% in 11-12. The gap is now reduced to 71% in 22-23. The share of food has fallen, which is positive. You know, that means people are having more money for other things. In rural areas in 11-12, food accounted for nearly 53%, come down to 46%. Urban areas, it accounted for 42.5%, come down to 39%. So there's more money left for others. Now, what did they do with that? Okay, the first implication for this, the CPI table will have to be reconstructed. Currently, the CPI has 46% weightage for food. I think in a year or so, it will be modified based on this data. I think food will come down to about 42 to 43%. Now, the bigger thing is if people were not spending on food, what else did they spend on? That's very important. Consumer durables has seen a decent jump, so that's positive. But more importantly, conveyance has jumped. Expenditure on conveyance by a good 1 or 2 percentage points from 2011-12 to 22-23. So it's a bit of a worry. Is it positive that people are traveling more? Or is it worrying that, subsidized transport is falling? The other one, which for me is heartbreaking, is that education expenditure is down in the last 10 years by about 1 percentage point, both in rural and urban. Again, is it because subsidized education is available? Looks a little tough to believe that. It looks like people have spent more on other things and less on education. Not a very good thing when you are on the verge of capturing your demographic dividend. There are lots more takeaways from this. It's a vast data. The MOSPI has only released one fact sheet. Much more will be revealed in the days to come.
Right, Lata, thanks very much. Very interesting. And, we'll, through the course of the day, keep putting out more information. As Lata said, it's quite a bit of data, which we will get to you. And, of course, get your reactions as well on some of this. We'll take a quick commercial break here. On the other side, Prakash Devan will be with us for some fundamental stock analysis. Stay tuned. That's coming up.
GPT Healthcare.
Welcome back. Hope you're having a good morning. Well, we listed out a lot of stocks that you need to track, and let's get in Prakash Devan to help us out with some further analysis. Morning, Prakash. Good to see you in. Hope you had a good weekend. Prakash, I wanted to ask you about Asian Paints. In light of Grasim making this aggressive push, I was reading a note coming in from Jefferies, and they're saying that if Grasim can head to that 10,000 crores odd, it would be a risk to volumes for the industry. It could be a risk to margins as well. Asian Paints is enjoying margins of more than 20%. So you'll see ad spends getting up. You'll see competition in terms of pricing. And it may not be the shorter battle like what we have seen with HUL as well as Colgate in 2000 and 2010. This could be a longer battle. What's your take? How do you approach Asian Paints as well as Grasim from here on?
So good morning, Nigel. Thank you for having me on the show. Interestingly, this is a battle where the lots that's kind of getting defined as time progresses. The launch itself we were not very sure in terms of where they would peg themselves in terms of price points and, what is it that their aspirations are. So now that it's clear that, they're looking at being a very respectable number two, which means that Asian Paints, they acknowledge the fact that Asian Paints has its own strength and presence in the market. It's the smaller players, as I mentioned the day of the launch as well, who are actually more vulnerable. So if you really ask me, the battle is not so much between Asian Paints and Grasim at this point. It's going to be between Grasim and the host of other players with the likes of Berger, Astral, JSW. I mean, the ones who have just started getting into the business and will probably find it even more difficult to establish themselves. They are the ones who will have to up the ante in terms of spend, in terms of distribution, commissions, and all of that. The other thing that I feel we need to also look at, Nigel, from a segment perspective, is that Grasim's entry with its own distribution strength on the basis of the cement, network, cement resellers network, it's going to actually add to the volumes to a large extent. The paint market is fairly robust in terms of where it can go. There's enough demand, there's enough pent-up demand that needs to get met with. So I would believe that they would also find it easier to cater to that rather than to take customer away from the existing names like Asian Paints. So there will definitely be competitive intensity, which means margins do get under pressure. But if the revenue growth continues to be robust, I believe it won't be such a big significant cut on Asian Paints earnings going forward. And already the stock has given you that comfort in terms of softening down on the valuations. So if the valuations persist at lower bands, it'll probably be a good time for people to look at Asian Paints rather than to bank on only Grasim to prove itself in the next few years. It's taken them decades to establish this presence. Asian Paints taken decades to establish itself in this kind of a slot. It's not going to be easy to dislodge them, and I'm sure they'll come up with more innovative stuff themselves. So I would believe it's going to be the smaller names that will be more vulnerable.
Okay, well, the MVP, so to speak, of this year has been BPCL, right? I mean, the stock is up 37% this year. And this morning, Morgan Stanley has written a note where they say that BPCL and HPCL continue to be their preferred picks despite the rally that we've seen already. Is it worth buying even at this price?
Good morning, Sonia. So I think if you really compare just for the basis of valuation and what business model each of them pursue, there's small incremental tweaks in each of their ways of generating revenue. I believe I would look at HPCL for sure. I would look at BPCL now at this point in time. It's IOC that still continues to offer a very huge potential in terms of the dividend payout ability, the kind of cash flows that they are looking at generating. And you're not paying too much for the valuation. Of course, you are getting this a few months back at 3.5 times multiples. Now it's probably 8, 9. But given the fact that the earnings will continue to catch up, the multiples won't look so rich. And what you need to understand is that these are companies that actually have an asset base which could be leveraged to do much more in terms of incremental value. So once green hydrogen comes through and all of those, you'll start seeing them sweat their assets much better. And the dividend paying capabilities will not change at all because they're not looking at very significant capex in any of the verticals. So I believe there is room. I agree. There was, in fact, some time back a report which scaled down the expectations in terms of earnings and said the valuations were rich. But I think those are going to be entry points for long-term investors every time something sentimentally happens to soften the prices.
Got that. Prakash, hi, good morning. A quick thoughts on two names. One is ABB, which was the big winner last week, went up 20%. And another one is Idea, where, of course, we heard comments from Mr. Birla saying that, well, they remain sort of on track to support the business, and that's kind of raised hopes that maybe something will happen. So just your thoughts on these names.
Good morning, Prakash. So ABB, we've understood, ever since they kind of got themselves refocused by hiving off what they globally felt was not the greatest of areas to pursue. They've demonstrated the ability to grow this business with very good margins as well. So, this is something like what happened to L&T last year in beginning of 23. You saw them focus only on the high margin business, absolutely keep themselves out of the mass markets. And that started reflecting in the consolidated margins. Same thing has happened to a large extent to the Thermax and Siemens of the world. But I think ABB is probably well priced. This is something where the global play and the domestic play kind of start aligning. What's happened to Cummins from 1200 to 2400. So these are things that you buy when the change is just about to start impacting the business. The inflection point is probably past. We're past that. So I wouldn't expect any kind of surprises to continue there. It'll probably be more range bound, but keep outperforming for sure. So if you have it, you hold it, but whether to buy it at this valuation, you may not have that kind of an alpha. On VI, Prashant, my sense is, while Mr. Birla did mention about the continued commitment to that business, it's look at the way the digitization demand in the country is and precipitated more by government programs, right? So if VI were to go down, it would have gone down long back. It's a very clear fact that VI is not going down. It probably will start getting some more once the capital infusion happens. It will start flexing itself in the qualitatively better circles. Maybe doesn't want to be a pan-India player as much as a Jio or a Bharti could aspire to, but in the pockets that it does, it will offer stiff competition as a respectable third player. So I believe things will start turning around. But, you know, the price hike that you've seen in the last week on back of these expectations, prices in a lot of that goodness. So I don't expect it to kind of keep growing at this pace. In fact, the challenge will be most investors will want to exit at certain levels which they've been waiting for. You know, so this happens in any kind of a turnaround. We've seen it in Suzlon. Started seeing it in Yes Bank. When things start moving from an absolute rock bottom, at every 1 rupee move, there are people who have targets for exiting, and that's going to keep a lid on the movement of the stock. But let's see. I think it's positive for the ecosystem, whether it's Indus Towers, some other tower companies. There's a host that's going to change if VI starts surviving and doing much better than what it has been doing till.
Okay, all right. Prakash, request you to stay with us. We'll just slip into a short break. You come back, we'll continue our chat with Prakash. We'll also get you some technical trading strategies. Mitesh as well as Sudarshan are waiting for us. Don't go anywhere.
मोदी सरकार
Welcome back. There's 13 minutes to go for the pre-open session. Mitesh Thakkar and Sudarshan Sukhani are with us with technical trading ideas. Gentlemen, great to have both of you here on the channel as always. Thanks very much for your time. Sudarshan, you know, Friday things cooled off a little bit, but barely so. And, you know, this after, of course, the market made new highs. The broad trajectory has seemed up and up. What would you do this morning? What should be the trading strategy?
Yeah, good morning. See, the markets are going to set a pace which will be slower than the previous momentum because we are going higher and higher. And clearly, there will be some kind of resistance at each level. But the trend is up. Now, on Friday, we had a narrow range day. That tells us that the markets are ripe for a consolidation of some kind. So for today, there's no question about the trend. It's up. We should be buying. But for today, there's no rush. You should be looking for a sharp correction intraday to go long, not otherwise. But that correction should come. The same view applies to the Bank Nifty. The Bank Nifty broke out of a trading range. A small correction suggests that there may be more deeper downside today. If that happens, buy on a sharp dip.
Buy on a sharp dip. Okay, all right. Mitesh Thakkar is also with us. Mitesh, the buy on dip strategy is something that has worked for the last 1 year. Do you think that's something that can continue? And what's the strategy for today?
Good morning. I think that's a good way of looking at the markets purely because in an uptrend, I think buying in dips is one of the most rewarding setups. Breakouts may fail, you might see consolidation happening, but if you get a pullback to the averages, then buying over there is a very good strategy. And we've had a good uptrend. I think there's no threat to the uptrend, but as Sudarshan rightly pointed out, I think in the short term, given the fact that Friday we had a SGX indicating about 80 odd points kind of an uptake, but it didn't open that high, and then we went into a very narrow trading day. I think this looks like a setup for consolidation, and therefore, again, intraday dips would be the point to enter if people are looking at a very short-term perspective. The levels I would suggest on the Nifty spot is closer to about 22,050. And on the upside, I think once we get past 22,260, then we might see some continuation towards 22,450 levels. So try to buy near 22,050. 22,250 becomes your first profit-taking area. In case you manage to get past that, then I think, look for second target of 22,450. But the overall trend is on the upside. But in the near term, I wouldn't rush into buying. I think wait for those intraday dips to happen and then take positions.
All right. Got that. I think so. Look for dips. That's the best way to do this. Mitesh, in terms of specific trading ideas, what is on your list?
Morning, Prashant. I have a mix of buy and sell calls today. Astral is a buy, big price and volume action happening on Friday. Disclaimer, I have positions over there, so there is Western interest. It made a fresh swing high, so buy here with a stop at 2020 for targets of 2,200. Gujarat Gas is a buy with a stop at 568 for targets of 596. And two sell calls. Dabur is a sell with a stop at 543 for targets of 520. And Coromandel Fertilizers, it's looking weak, but it's trading right at the 200-day average. So if it starts trading below that, so keep a price trigger of 1,074, sell below that, keep a stop at 1,090 and look for a target of around 1,030.
All right, and Sudarshan, what about you?
Well, it's mainly buying because the market trend is up. LIC housing is a buy. A small correction has led to a consolidation. It should break out above that, stop below 620. The only intraday short is Tata Chemicals, where a mini bear market persists. It's not able to cross any resistance level. It's a short, intraday short with a stop above 990. L&T is a buying opportunity. The stock had a decent and sharp correction. That's now entering into a consolidation with slightly bullish characteristics. It's a blue chip stock. Buy with a stop under 33.30. And finally, Lupin, which is making new highs regularly, is a buy with a stop under 15.95.
Okay, all right. Thanks a lot for that. Let's take a quick break. On the other side, we'll come back with the pre-opening rates. We'll also have Avantika Saraogi, the Executive Director at Balrampur Chini Mills, to discuss their foray into the polylactic acid manufacturing space. Welcome back. Let's get some F&O cues out of the way. Chandan Taparia is joining in. He's the derivative and technical analyst at Motilal Oswal. Chandan, hi, good morning. I wanted your thoughts on the overall market setup and also what is the expectation in terms of individual stocks today?
Good morning, Sonia. Thanks for having me. So Nifty made a new lifetime high, but some consolidation is clearly visible at higher zone with the absence of follow buying. But yes, trend is clearly intact if I look at the weekly, monthly chart. So we will continue to be with buy on decline stance with the view that till it falls about 21,900 zone, index has potential to extend the move towards 22,500 marks. Looking at the Bank Nifty index, it remained consolidative but witnessed good recovery in last couple of days. So with the support of 46,500, we are expecting momentum to extend towards 47,500 zone. Now looking at the stock wise, first traded is buy from real estate counter. Nifty Realty looks good. And Godrej Property is one of the strongest counter where we have seen sustained buying interest. It has given a consolidation breakout and making higher tops, higher bottom on the daily and the weekly scale. Our entire sector is doing well. And this stock has potential to rally by further 4 to 8%. So one can buy with support of 2410. And Godrej Property has potential to move towards 2600 zone. Second trading area, there is buy on Dixon. Pole and flake pattern breakout supports are intact. Major trend is in continue to be on upside. So recommended to buy with support of 6,700. Here we have a target towards 7,200 zone. Last trading area, that is buy on IRCTC. Stock witnessed some profit booking in last 4 weeks, and now it seems that consolidation or corrective move of last 4 weeks is getting over. We have seen some put writing and it is holding well above 50-day exponential moving average. Bottom already formed in the daily chart, and a small follow-up can see the short covering move as well. So one can buy IRCTC with support of 940. And here we are expecting a rally towards 1,000 to 1,020 zone.
Okay, well, thanks a lot for that. Prakash Diwan is still with us. Prakash, I wanted your thoughts on Dixon Tech. It's launching a new factory in Uttarakhand. There is a pact that the company has signed for manufacturing of mobiles, etc. And this is a stock that has given great returns to shareholders in the past. At this price, how does the risk reward look?
No, Sonia, interestingly, what's happening is one of the reasons why some of these stocks like Ember and Dixon corrected in the last couple of years after the stellar run that we saw when they started the business is because there was a huge dependence on some of the larger OEMs, and whatever advantages they got through the PLI and scaling up was actually taken away by the OEMs given their dependence on these. But the new product mix, the kind of diversification that they're doing, is making them much more smarter in terms of the overall business trajectory. So I think the valuations also, of course, they're still rich because of the scarcity premium or whatever. But once the valuations soften a bit, these could start getting to feature in portfolios as long-term bets because they absolutely ride the India story in terms of the export orientation, the strength that we are getting in some of these niche products. So I'm quite positive on that space, but we are looking out for better names, smaller names, which still have much more headroom to grow rather than the largest ones, which might take some time to kind of grow from here. But yes, there's absolutely, and this news flow actually reinforces the fact that they will continue to outperform the market through this smarter product mix, and hence you could look at them as attractive bets with sort of valuations.
Okay, all right. Prakash, always good hearing your thoughts. Thanks so much for stopping by. Wishing you a good Monday.
Thank you.
And we'll touch base all through the week. Well, let's focus on our first corporate then, Balrampur Chini. They announced their foray into polylactic acid manufacturing with an estimated investment of around 2,000 crore rupees, which will be between debt and internal accruals over the next 2.5 years. To discuss this, we have Avantika Sarogi, the Executive Director, Balrampur Chini Mills, who joins us on the show. Hi, Avantika. Congratulations, first of all. Some part of the street was wondering what you're going to do in terms of diversification. Now you have laid out this plan. I wanted to understand a few more details. A rough math suggests that polylactic acid prices are in that vicinity of around 200 to 300 rupees per kg. You're looking at setting up a 75,000 ton unit. So revenue from this particular capex will be approximately 1,500 to 2,000 crores. Should we be working with that number at the end of this 2.5 years? And also a couple of brokerage notes are mentioning that EBITDA margins will be around 20%. Do these numbers fit in?
So thank you so much, Prakash, for having me on the show. The thing is that I'm not at liberty to discuss the financials because we haven't got a board approval for that. But having said that, your pricing is not wrong. So possibly you could be in the right direction is what I can say. Should I talk a little bit more about why polylactic acid? Would that sort of answer some of the...
Please go ahead. Yes, please go ahead. Avantika, so just to confirm, you're saying that we are on the right path. This is Nigel on this side. Revenues in the vicinity of around 1,500 to 2,000 crores. So we got that correct. And margins of closure around 20% as well, right? Those numbers are in the broadly correct?
The second part I cannot say. The first part, I think, broadly correct.
Okay. All right. And you want to tell us about, what is the global size? I think it's around 400,000 tons or thereabouts. Tell us what's the opportunity and how much are you all looking to get into that?
So we are setting up a large industrial scale plant of 75,000 tons. This is the global level size. So we should have all the advantages there. Other than that, I want to talk about an additional advantage that we have that possibly the other players don't. So we are setting up this unit in adjacent to one of our existing sugar units. So we save a lot in terms of transportation. And also the biggest silver bullet I think that we have is that we have our own bagasse for power. So not an ounce of gas or coal or oil of any kind that, the other players are obviously using at this moment. So possibly we would have an advantage in terms of ease of doing business as well as financially, as well as even we should be the greenest in my opinion, but this time will only tell. So 75,000 tons, the market right now is 300,000 to 400,000 tons, but this is not even 1% of total plastic consumption in the world. So the headroom is immense, is what I would say.
Right. Avantika, hi, good morning. Thanks for joining us and good to see you here on the channel. Prashant this side. Now, could you tell us a couple of things? One is, are there other alternates to plastics? Apart from polylactic, because there's a lot of work happening on the technology side to kind of, bring about sort of biodegradable material and move away from plastic. So is this one of the many things which we will see over the next few years, or this is it? That is one. And second, I think the cost is higher, much higher as compared to plastic. So how will we, in terms of industry sort of adoption and offtake, there's a big difference in terms of price. Possibly it will keep coming off, but what's your own sense?
So thank you so much for the question. I think these are the two main questions that everybody must have in mind. So firstly, I'll answer your question about, is this the only bioplastic or is this the only solution for, the war against plastic, if I may add? I think not. I think there cannot be any one answer to a problem of this size, but polylactic acid is one of the largest bio-based and biodegradable plastics being made in the world today. It is industrially proven. And the beauty of it is that as many bioplastics that develop, there are more recipes that develop. So we can take advantages from different things and, you can make compounds which answer the problem of that particular usage. For example, I would say that if we want a marine degradable product, PLA is firstly the cheapest bioplastic, right? So it is great to be the base, and then you add in maybe a PHA or an additive or something, and then you get a marine degradable product. Supposing you want something that home composts. Similarly, you would make a recipe like this. You could blend in PBAT. So PBAT is very stretchy and PLA is very rigid. So when you're trying to make a carry bag, you need the carry bag to be able to handle some weight, right? So it has to have some strength. So when you mix PBAT with PLA, suddenly both of them become better. So this is what I want to say. PLA is one of the largest and it is the cheapest, and it will
Got
be
it.
used, I think, as a filler in most of the things, like 40-50% of used plastics can be replaced with PLA alone.
Got it, got it. Avantika, hi, good morning. This is Sonia here. I just wanted a couple of more questions. If you can help us with what the average pricing would be per kg and what would that mean for your own margin picture? Also, what are you looking at in terms of, say, an IRR or a payback period? Any kind of numbers that you can share with us on the business?
Hi, Sonia. Good morning. I'm not at liberty to talk about the IRR and the financials, but I want to say that they are positive. I want to say that the pricing of PLA is around, I would say, 250-300 rupees, as already is known by the market. But I want to add in a very important point. When we are trying to firstly compare it to a regular plastic, it is much harder. So you can use much lesser PLA to get the same result as a regular plastic. So already the price becomes attractive because you would use lesser in terms of weight. And obviously it's being sold in terms of weight. So that's one thing. The second thing is, when you talk about a plastic ban, for example, in our country, there's a single-use plastic ban, then you are no longer competing with the traditional plastic. We are now competing with the paper, cardboard, cloth, and all of those glass, all of those things. So when you compare ourselves to that, we are much more viable than that.
Okay. All right. Avantika, just one final question on the demand situation, because, when you transition to things which are 2 times more expensive in a very price-sensitive country like India, it generally takes time for demand to pick up. Your quick thoughts on that?
So I just, like what I was already saying, it's not going to work out to be more expensive for the consumer necessarily, because today, anyway, if we talk about single-use plastics, we cannot use them in certain scenarios. So we are competing not against plastic, but against the alternatives of plastic being used to replace it. We are much cheaper. So the viability is much better from there. Plus, when we have already, I think it's already coming up on the screen as well, when the finance budgets have already announced something, some impetus for biomanufacturing, biofoundry, bioplastics have been mentioned, then we expect that the government would also help the journey of creating the demand and, helping with applications.
Okay, all right, Avantika, we appreciate you joining in. It's being read positively, this diversification. You have given us the rationale as well. The number that we managed to get out of you was the revenue potential is around 1,500 to around 2,000 crores approximately. You're looking at a 75,000 ton unit, while the international capacity is around 400,000 odd. Next time, hopefully we'll get some more numbers in terms of the IRR as well as the margin picture. Good to see you in. Well, time to move on. Pre-open rates as well have settled. So let's see what the Nifty has settled out. I think it was a little bit higher, or no, actually it's flattish, I think. So it's a bit flattish with a tinge of negative bias. Let's get Sudarshan back. Sudarshan, at 9:10, what's your call?
Well, consider buying L&T with a stop under 33.30.
Okay. And Mitesh, what about you?
I'll go with the buy on Gujarat Gas for a trading target of 596.
Okay, well, let's talk about the momentumizer stock of the day. Vivek is joining in to give us more on that. Vivek, over to you. What are you looking at today?
Well, good morning. So the stock on radar is Kalpataru projects. What we had done is on Friday, we had reported about how one of the Middle Eastern agencies had said that Kalpataru projects was the lowest bidder for Aramco's one big large project called Master Gas Agreement Expansion Project. On the back of that, the stock had reacted on Friday. And in fact, Kalpataru is actually the L1 or the lowest bidder for 3 packages over that. So if you're looking at how the stock has performed, Friday it was up over 5%. In 2024, the stock is up over 37%. Last year's stock up over 80% and comfortably trading above all of the key DMAs. Nuvama, in fact, has reacted to that particular development. What they have said is that this could create a potential re-rating as well as could cause EPS upgrades if and when this particular order win does come in. On the back of that, Kalpataru power projects will continue to remain in focus.
All right, Vivek, thanks very much for that. The next one is Asian Paints. A lot of cautious commentary coming in on the back of the paints business launched by Grasim. Mangalam has got more. Mangalam.
Well, the brokerage commentary this morning is full of paints. You know, you have CLSA, which has actually downgraded Asian Paints to sell. The target price has been cut from 3,200 rupees to close to 24.25, making it the lowest target price on the street. The reason why they say that is because competitive intensity is likely to heat up going forward. Importantly, they've cut their FY25 and FY26 estimates as well. But most importantly, they believe that in light of heightening competition, the company should actually see a derating in the multiple. Currently trades at around 66 times. They believe that it should be cut down to a 15-year average of close to around 43 times itself. And Goldman Sachs has done the same. In fact, they've cut their target multiple from 58 times to 52 times. They've cut their EPS estimates as well. And as a result of which, they've cut their target price from 3,300 to 2,850, saying that Birla Paint entry strategy is way more comprehensive than earlier assumed. And speaking about that itself, Citi has gone ahead and kept their buy rating on Grasim with a target price of 26.50 because they feel confident about Grasim's ability to achieve the vision of becoming a number 2 player. As they've spoken about their differentiation in the products and clear dealership plan as well. And Macquarie finally has said discounting levels in the paint industry will not sharply rise because of competitive intensity in the industry. They prefer Asian Paints to Berger because they believe that Asian Paints will be relatively more resilient, even as Berger will see a little more impact. They have a target price of 4,000 on Asian Paints with an outperform rating.
Okay, thanks a lot for that. Well, Paytm is the other one on our radar. Abhishek is here to tell us why you should watch that one. Abhishek, over to you.
Well, Sonia, to begin with, RBI has advised NPCI, that is National Payments Corporation of India, to be the third-party application provider for UPI channel. So this is to ensure that UPI operations of Paytm app is as per the norms and it doesn't get impacted much. However, NPCI is yet to respond, as well as further updates from Paytm with respect to potential impact to businesses in Feb 24 will be awaited. This can remove one of the 2 regulatory concerns that is there on Paytm, other than being the ED investigation for Paytm. Analysts do say that Paytm's business model is moving towards a pure payment company, while focus will now shift to smooth transition and rate of user or merchant retention will be a key focus to watch out for. Back to you.
Abhishek, thanks very much for that. There's 30 seconds to go for the market open and it'll be a higher start, I think, as the Nifty is indicating. The pre-open is indicating, but lots of individual names to watch as always. Paytm, of course, we'll track 4 circuits. I mean, over the last 5 days on Paytm on the way up, I think it's basically close above 400 rupees on Paytm and is starting higher in pre-open. There is, of course, Asian Paints, which should be in focus on the back of the cautious commentary which Mangalam was pointing to. And of course, there is individual stocks which will be in focus. Kotak Mahindra Bank, there is HDFC Bank, Dixon Tech perhaps should be another one which are going to be in focus. And of course, the big winners and losers and how they follow up today is something we will track. There you go. On your screen, it's a 40-point lower tick, so 22,173. So that's the dip straight up, right away at the word go. So GIFT Nifty was indicating a flattish start. I think the pre-open indicated a slightly flat to higher start, and you're getting about a 50-60 point dip, continuing from the 0.25% loss that we saw on Friday. All right, the Bank Nifty is up on your screen. We're at 46,666. And you've got the mid-cap index, which is also starting just about 0.18% lower. But Sonia is standing by on the wall with more rates. Sonia.
Thanks a lot for that. So since the market is very flat, right? I mean, there's a bit of a negative bias that you're seeing at the moment. But let's look at what individual stocks are doing. Reliance is the one that is top of mind, as reports that the merger pact with Disney has been signed now. Reliance is flat with a bit of a negative bias. Asian Paints have seen a lot of brokerage downgrades, as Mangalam was just telling us a while back. Asian Paints has seen a further slide of 3.5%. CLSA has downgraded Asian Paints to a sell. They have cut their target price to 24.25, which is a big downside even after the recent fall that Asian Paints is seeing. And their primary concern is the fact that Grasim entering into this space will make it very uncomfortable for the current incumbents. Kotak Mahindra Bank in focus. Kotak Bank will be selling 70% of Kotak General to Zurich Insurance Company, so keep that on your radar. Banks in general have been under a little bit of pressure in the last 3 days. HDFC Bank is flat. RBI has approved a stake sale in HDFC Credila. I'm looking at SBI Card as well because that one could be under pressure. It's been losing market share, down about 0.5%. The market share has fallen to 18.7% versus 19.6% year on year. JSW Infra is actually looking good. It's awarded, it's won an award for handling dry bulk cargo. So keep an eye out on that. Dixon Technology is in focus as well. It signed a contract for mobile phone manufacturing. It's putting up a new plant in Uttarakhand as well, so that stock is looking good at 6,900. Apart from that, Paytm up 4.5%, so clearly one of the big stocks at the moment. The RBI has advised the National Payment Corporation of India to be the third-party application provider for the UPI channel. So Paytm is up about 4.5%. And, a couple of other stocks. Asian Paints, of course, is the big loser. But you also have other large caps like Titan, BPCL, the entire technology space, HCL Tech, Tech Mahindra are all under pressure right now, down about 0.5% to 1%. So that's taken the Nifty down about 50 odd points, but nothing alarming, just a flat move with a bit of a negative bias. It's the Nifty Bank that has been struggling for the past few days, and that's something that continues. Back to you.
All right, thanks a lot for that, Sonia. Well, a couple of big stocks that are moving around. You have Vodafone Idea as well as Indus Stars. There is that hope that Vodafone Idea can come up with the money, and that's why after seeing the big run that we saw in Friday's trading session, there is some green on both those two stocks. Jio Financial Services, what a beautiful move we have seen on that stock. One of the big outperformers for the month of February as well as for the year so far. It continues to chug along. It's moved from around 240 to around 340 in record time, I think in the last 45 days or so. Couple of stocks are in focus because they've won orders. You have transformers and rectifiers. A small order win is what we were flashing for on the screen. So that stock had opened up briefly in the green. Skipper, they won yet another order. I think this time it was from Power Grid. So that stock as well as high. So both those two reacting to that piece of news. Sonal told us that Rain Industries, well, the past quarter wasn't great in terms of numbers. The outlook, though, their commentary was quite positive. For the time being, though, it's under pressure. It's down 7.5%. IRDA made a high of around 215 rupees a few days ago. Well, that's come off the top, and now it's hovering around 151. There's no exit today. It's at lower circuit. And two stocks in the broader markets that are moving on particularly high volumes. One is Infibeam as well as Tourism Finance, where we've seen quite a lot of block trades out there. So both those two in top trading stocks, just pointing both of them up, Infibeam and Tourism Finance.
All right. Well, 45 points lower is what we have on the Nifty, and things are looking, a little off, but off color, I should say, but nothing large at all. Market breadth is strong. There's 2:1 in favor of advances. So again, in the broader market, things are looking good. Jio Finance is the top volume traded gainer. Jio Finance had a good week, the last one. It went from, I think, about 270 from the week prior close to 340 as of the close last week, and it's trading around there this morning. Paytm is up another 4%. I think we mentioned that, big volumes. I was talking about Vodafone Idea earlier, and that's the one, along with the Indus Tower, which are looking up. JSW Infra, I think we mentioned. Tourism Finance, Nigel just pointed out. Idea Forge, right? That's the other one. There was that news that Idea Forge is going to start get into the US markets, right? 6% higher on Idea Forge. So it's come off a big trough. The low recently was about 686. Stocks 800 plus now, Idea Forge. But of course, nowhere near from where they came to the market. Zaggle is another one which is moving up. Zaggle has had a pretty good run. And the stock now is done phenomenally well, 30% in this month so far. Indocount, I don't know if it's just one textile name, but Indocount is up 4%. PNB Housing is up about 4.75%. That's about 735 or so. And look at something like Orchid Pharma, 7.5% higher, and it's got volumes on it as well. Another one we highlighted on Friday and Thursday as well was Tarmat. Tarmat is up another 10% this morning, and it's got decent-sized volumes coming through right now. And there is Voltamp as well, which is up about 5%. So lots of movers and strong out of the gates is how you describe, the market action at this point in time. The only big noticeable loser is Rain Industries, which is down 7%. Of course, it's had a very sharp run up So that is that. And of course, we already highlighted Asian paints, a lot of cautious commentary. So the stock's taking a bit of a break. It's down 3.5%. Pratik Gupta is with us, Chief Executive Officer and Co-Head at Kotak Institutional Equities. Pratik, it's always a pleasure having you with us here. Good morning. Thanks very much. Prashant this side. You know, we had a bit of a break with these stake sales. Large investors, private equity, VCs, promoters, but well, that's back. Back and how? And last week was big. The week before that was big. What's going on, Pratik? And you know, we are just to differentiate this. A lot of MNC promoters are also selling, right? Which is it's picked up quite a bit. I think it started with Timken, but we've had 2 or 3 more transactions since. Your thoughts?
Hi, good morning, Prashant. Thank you for having me here. Yes, you're right. We've seen we will probably see more of these stake sales coming through. Typically, what happens is during the earnings period, which is usually the 15th of Jan to 15th of Feb, typically, a lot of the sellers are insiders. These are either promoters or private equity funds with board seats. So they typically don't sell at that point in time. Also, investors are quite distracted with looking at their own portfolio companies with the earnings season going on. So typically what happens is after the earnings season every quarter, you do tend to see a resumption of stake sales coming through. So this quarter is no major surprise as such. On the MNCs selling their stakes, I think it's very company specific. For example, both in the case of Whirlpool, BAT, etc., it's also a little bit to do with the issues at the parent. The local unit is trading at much higher valuations, so opportunity to monetize, and the market is buoyant, so that kind of supply can get absorbed. So those are the kind of issues over there. But generally, yes, we are seeing more stake sales come through. And that in some ways it adds more liquidity to these stocks, which they may have a lower free float, so that helps in terms of overall liquidity. But I think from investors' perspective, longer term, they need to look at the fundamentals of the company and not get too hassled by these stake sales by promoters. They may have very different intentions and very different time horizons versus investors who are buying the stocks over here.
Okay, interesting. Well, Pratik, hi, good morning, and thanks a lot for joining in. So let's talk about where there is potential in this market, right? Because that's the one thing that everyone is struggling with, to find growth as well as value. It's just become such a tough market to find good valuations. Where do you see potential now over the next 1 to 2 years?
So you're right. I think most investors are struggling on the valuations where they are right now. India's Nifty at 22,200 is currently trading at 20.5 times 1 year forward earnings, which is not cheap by any stretch of the imagination either, versus India's own trading history, whether you take a 5-year period, 10-year period, 15-year period. Or when you compare with the likely growth ahead, we think growth is slowing down. FY24 at Kotak, we are expecting the Nifty to grow earnings by about roughly 18-19%. But we think over the next 2 years, the growth will slow down to about 12% on average. Again, if you put yourself in the shoes of a global investor, again, India looks quite expensive compared to, say, a China, some of the other Southeast Asian markets. Now, granted that in China, there are policy risks and there's greater uncertainty, but nonetheless, the valuation gap and the price performance has been very stark in the case of India. So we are seeing a lot of global investors struggling with buying stocks in India. In fact, they're just holding on to what they have. We're not seeing too much of fresh inflow. That's also reflected in the year-to-date foreign selling data on the cash market. They've been net sellers to the tune of roughly 50,000 crores from 1st Jan till last Friday. And the local funds, they are seeing inflows, therefore they're investing. But even they, when we speak to them, are really struggling with the valuations right now. And it's more of a, I guess, just being a bit more opportunistic here and there. But if just to go back to your question, the areas where we think there is still some value left is perhaps still the banks, which have done well, but not as well as the broader market. Banks and insurance companies are still trading below their pre-COVID valuations 4 years back. So we think that's one area, that's the only major area which stands out. Then obviously there are other areas like, real estate or high-end consumption in the form of luxury hotel chains and so on. But amongst the large sectors, I would say it's only the banks and maybe the life insurance companies.
Right. Hi, Pratik. Morning. Good to see you in. Nigel on this side. Within banks, what would you like at this juncture? Private sector banks or public sector banks? Both of them have moved in opposite directions, actually. So at current reckoning, what do you like? And also, you had a conference, right, last week. What are the key takeaways? Couple of points.
Okay, first on the banks, we continue to like the large top 2 or 3 state-owned banks. The main benefit over there being, despite the strong price performance, valuations are still attractive. But keep in mind that we're running in a very tight liquidity situation. Deposit growth is tough. The state-owned banks have a very strong deposit franchise, and that enables them to garner deposits quickly to meet the credit growth requirements. So we like the top 2, 3 PSU banks, but equally, we still like the 3 or 4 top private banks. Although I must highlight that in the short term, given the ongoing tight liquidity situation, we do expect to see slightly weaker earnings growth for the bank sector as a whole in the March quarter and the June quarter in the short term, because loan growth is slowing down, NIMs are coming under pressure, and the best of the low credit cost period is behind us. So from now on, credit costs will only inch up slightly. It's just that the overall valuation versus the rest of the market still looks relatively attractive compared to other stocks in other sectors where either the stocks have gone up quite a bit and valuations are getting looking quite expensive. Now, coming to your question about the conference, yes, we had a very large turnout at our annual investor conference last week in Mumbai. We had 1,000+ institutional investors. And I think more interesting was this time the increase came more from the foreign institutional investors. We had, if I remember correctly, roughly 250 institutional investors from all over, from New York, London, Singapore, Hong Kong, etc. And many of them came with large teams. Some of the large global long-onlys came with large 18, 20-member teams. And we had a very wide variety, from sovereign wealth funds to long-onlys to boutique India-dedicated FIIs to hedge funds and so on. But I think one overwhelming message that we came through, which ties in with what I just said earlier, there is a lot of interest in India. Everybody is trying to come up to speed and improve the knowledge about various sectors and stocks in India. Many of them were coming for the first time or coming after many years. But there is not an inclination to buy India right away. Almost everyone likes the medium-term story, but they find valuations a bit challenging.
Okay, all right. Just one final word from your end on some of these spaces that have been doing pretty well in the last 6 to 12 months, right? Whether it is the electric vehicle space, the renewable energy space, defense PSUs have been doing very well. Any of these themes that you still like, where there could be follow-on buying despite valuation discomfort?
So I think in the renewable energy space, yes, that's a growth area. So all of these spaces actually, fundamentally, we like these. These are the long-term sort of growth stories. But I think it's also, you have to go back and look at them literally stock by stock. In some cases, let's say the PSU defense companies, we are a bit cautious in the short term, despite a very positive long-term view. So it depends on the investment time horizon. In the next 2, 3, 4 months, we would be a bit cautious. Perhaps if these stocks stagnate or correct a little bit, we may become a bit more positive. Although from a longer term perspective, 3 to 5 year view, we're still very positive. EVs, I think there could be a little bit of a slowdown in the short term, government subsidies being withdrawn, more competition coming in, the incumbents coming back with their own models and launches and, getting new technology, etc. But again, it depends on the company, which sector, two-wheelers versus two-wheelers, we're relatively, EV two-wheelers, we would be more positive compared to the others. And so on. So it's really stock by stock. But in general, I would also look at the incumbents in these spaces where you would be a little bit more cautious.
Okay, all right. Thanks a lot for joining in, Pratik. Appreciate your thoughts here on CNBC-TV18. Well, that's the word coming in on the market, which, by the way, is very, very quiet. It's not done anything up until now. Absolutely flat. The Nifty just holding on to record highs at 22,100. And individual stocks, Asian Paints is actually your biggest loser this morning. On expected lines, I guess, down about 3.5% now on Asian Paints. That big CLSA downgrade has come through. But on the flip side, L&T, Bajaj Auto, Power Grid, Cipla are a couple of stocks that are doing pretty well. But let's take it straight to Aarti Industries. The company's Q3 performance has been weak year on year, but it was another quarter of sequential growth. Rajendra Gogri, the chairman and managing director at the company, joins us now to talk about that. Mr. Gogri, good morning. Always great speaking with you. Thank you for joining us on the show. I wanted to understand how the demand situation is currently, because you had mentioned that in certain segments like dyes, pigments, polymers, there is some recovery in demand, but the quarter has been very weak for you. So just tell us about the situation on the ground currently, and if you're seeing recovery, what kind of growth are we looking at in Q4 and FY25?
Yeah, as mentioned earlier, that inventory correction and all is going on sequentially. So our Q3 performance was better. So discretionary side, I think sequentially demand is getting better, and so Q4 will be better than Q3. And FY25 for discretionary should be near normal. But agrochemical, I think product-specific pain may remain carry forward in FY25 also. As far as the demand is concerned.
No, so can you give me some numbers? In the 9 months of this year, the revenues were down about 7%. You're sitting on a base of around 500 crores for 9 months of this year. Do you see further pressure before things recover? And what is do you see single-digit growth in FY25? Any kind of estimates?
Yeah, this first 9 months we had about 700 crore plus EBITDA, and this year FY24 we are targeting about 950 to 1,000. But next year we expect almost 50% jump in EBITDA. So EBITDA target about 1450 to 1700 crores next year, based on both the volume growth as well as some margin growth as the normal market demand recovers. So substantial increase is expected in next year, FY25.
Okay. So basically about a 40% growth in EBITDA, right? In FY25 over FY at the lower end, but it could be higher if you do 1700 crores
Yes.
in FY25, 20-25% volume growth. Mr. Gogri, so is the worst behind? I think from a investor standpoint, that's the big question. At what point have things troughed as you see it? What's going to be? Just talk to us about that, because we have the numbers. And is it going to be a sort of tactical kind of a recovery? And again, you see a bit of a slump, or have you seen the worst and now for the next couple of years things are going to be up? You said discretionary demand should be back to normal next year. Go on, sir.
Yeah, I think as far as the discretionary demand next year should become normal. So worst is over, and I think agro also, I think after a couple of quarters we should get a normal demand. And as we have been putting up more capacities, for us, definitely this year will be the launch pad for multi-year growth. So like next year we're expecting 40% plus. And subsequently also we expect a sizable growth coming in with a new product range.
So agrichem should also normalize, say in FY20, but only maybe a year out, sometime early FY26?
No, FY25 general indication is by a couple of quarters, I think it should normalize. That is a normal indication from all agchem companies. So second half of FY25 should be near normal for agchem also.
Got it. All right. Hi, Mr. Gogri. Morning and good to see you win. So the 950 to 1,000 crores and around 1,500 to 1,700 crores in terms of EBITDA. But the sense I get is you're bracing for better times going ahead. And I say that because of your capex plans. For this year, I think capex plan was around 1,200 crores. You could correct me on that number. And for the next 2 years, I think you have a capex plan of around 2,500 to 3,000 crores. Could you give us, outline this capex plan? And what is your debt number? And what does it go to at peak levels?
Yeah, FY24 around 1,200 to 1,300 crore. And FY24 and FY25 combined is 2,500 to 3,000 crores. And as far as debt is concerned, we had about 2,900 crore debt currently. And some debt increase will happen in FY25.
So what is the peak level, sir? 2,900 is the net debt in the books?
Yes. Next year in around 3,700, 3,800 kind of a debt in FY25 may happen.
So, and the debt peaks out at around these levels, I'm guessing.
Yeah.
And on this capex that you're talking about of close to 2,500, 3,000 crores for the next 2 years, could you give us what could be the asset turn on that?
Yeah, this our new products. What line we are adding is more on more value-added products. So asset turn will be around 1.2 on that.
Okay. So you're saying next year in FY25 your debt will be 3,800 crores and your FY25 EBITDA you're looking at 1,450 to 1,700 crores, correct?
Yes.
Okay, got it. Can you tell us how chemical prices are panning out at the moment? Is there an increase that you've seen in benzene and toluene prices? And what is the expectation over the next 6 to 12 months?
Yeah, current quarter the benzene toluene prices have seen increase, and actually that tends to more with mirror with the crude oil also. So we cannot have any forecast over 6 to 12 months. We generally follow crude oil prices.
Okay. And can you tell us what is the update as far as long-term contracts are concerned? Most of your long-term contracts have not seen the revenues materializing substantially, but when will it start contributing to your own revenues?
Yeah, this last contract what we have announced is already running on a full stream, 1,500 crore per year. And the 3,000 crore also already is a running contract. And that also the volumes will be continuing from that.
Okay.
All right, Mr. Gogri, we'll leave it there, sir. And good to hear that you're saying that the, in your own words, worst is over. Discretionary demand should be good, 40% growth in EBITDA and FY25, and AgChem should also do well starting in a couple of quarters. So basically second half of FY25 when that should start to sort of come in as well. Thank you very much for joining us. That's Aarti Industries, 672 is where the stock is at. Well, the market's down 35, 40 points, so it's quiet. Market breadth is still positive, although I think the gap has narrowed down a fair bit. Hoodco has come up with a 6% gain. I mean, that's a new one, which is looking good. And, I can spot a few of these Adani Group stocks, which were not there in the mix in the morning. So there is Adani Total Gas, which is up 4%. And Adani Energy Solutions is the other one. That is basically Adani Transmission, which is up 4% as well. So, both have got large volumes as well, which should be up on your screen. Yep, there you go. And of course, I mentioned Idea Forge earlier. It continues to do well with a 8% pop at this point in time. Policy Bazaar is another one. High interest stock, so just mentioning it. It started quiet, but it's up 4% now. So that's another one to take note of. On the downside, I mean, there is only, there was Rain, which was down sharply. Asian Paints was down sharply. And there may be a few more which have joined. Tata Technologies is down 4%. And there is Phoenix Limited, which is coming up with a 3.5% cut as well. So these are some of the volume-led large losers at this point. We'll take a quick commercial break here. We'll come back. And of course, we'll get chatting with Mr. R.K. Goel, Managing Director at Kalyani Steels, to discuss their MOU with the Odisha government. And of course, business plans and business outlook going forward. Stay tuned.
Co-presented.
Welcome back. Well, let's focus on the stock that's been in focus for the last 3 months or so. Kalyani Steel, they've signed an MOU with the Odisha government to set up manufacturing unit with a total investment of around 11,000 crore rupees. Mr. R.K. Goel, the Managing Director at Kalyani Steel, joins us on the show. Hi, Mr. Goel. Good morning, first of all, and thank you so much for joining in. Mr. Goel, for the last 10 years or so, whenever you have joined at the channel, I've kept telling you that the promoter entity is lacking that fire. And the street really, is always disappointed that you have cash, but you're not expanding capacity. Now you have come back in style. We have seen inorganic growth, and you're talking about a massive capex in Odisha. Just to clarify a couple of points, 11,000 crores plus, right? 11,750 crores is the total investment that you're putting in. Could you confirm that? And also, could you break it up for us? How would you fund it? Will it be a mix of debt, equity? Is the promoter entity looking to infuse some more money into the company?
Good morning. First of all, we were looking at a right opportunity, right environment, political stability to set up a project in the country to make investment. As you know, typically projects in ferrous or non-ferrous segments are highly capital intensive. Today, we are at the right environment, right political stability, and global situation is very helpful for India. So that's why we have taken a decision supported by the Odisha government to make a large investment. Now, the total investment, 11,750 crore, is in two parts. One is for specialty steel and auto cluster. Second is for titanium alloy, titanium metal, and aerospace and defense components. Now, you know, as far as the titanium part is concerned, it's extremely difficult to get a technology. So we are in the process of developing technology, which will take some time. As far as the specialty steel and auto cluster part is concerned, that's our core competence. And this project will move very fast. Even then, starting from environment clearance and all, it will take anyway around 4 years of time.
4 years of time. But sir, you know, the question that I asked was, how do you fund it? So we have got broad details of the entire project. You waited for the right time. It will come up in the next 4 years. You're looking at all clearances. How do you fund this? 11,750 crores. How much of it will be debt? I think the last time you mentioned you have some cash of around 600 crores. So how much of debt, how much of equity, how much of fresh issue, how much does the promoter bring in?
As I mentioned, we divide the whole thing into two parts. First, let's talk about specialty steel and auto cluster. In that, we will be able to fund by equity as well as the debt. And we have already got a lot of offers which are coming up, that there are a lot of people who are ready to lend us money and at a very attractive rate.
Okay, so there'll be an equity component as well. Let's understand more then, sir. Do you want to break it up for us of the ratio of equity and debt? And you're talking about people are interested. People have been very interested in Kalyani Steel because it has good parentage and there's tremendous scope of growth. So in terms of the equity component, will it be from a financial investor? Will it be from a promoter entity? Or could there be a larger steel company that wants to be part of the business?
No, you see, we already have a lot of cash and next 3-4 years of cash generation and all. I think that will take care of whatever the equity component required. And if there is any shortfall, we will find a way to fund it. But I'm pretty confident we may not require. And balance will be debt. And we are yet to fine-tune everything because after signing the MOU, now some of the costs, we have a better clarity. But still, once we start negotiating various equipments and all, then we will know exactly how much is the money required. And accordingly, we will organize. I don't see any problem in that area.
So could you break it up for us? How much will be the equity component? How much are you looking at in terms of the debt component, sir?
It can be anything around 60-65% or something like that.
60-65% will be equity?
No, debt.
Oh, will be debt. All right. Okay, got it. That gives us a little more clarity on the situation. Can you tell us who are the targeted customers that you're looking at? Will it be with the group company Bharat Forge itself?
Actually, this project is configured in a manner that majority of products will be produced which are not produced in the country. And at the same time, they are produced only by 1 or 2 companies globally. So it will be replacing some other products or imports, or it will create a large international market. At the same time, this project has a capability to produce 100% green steel. So there are a lot of things which really need to unfold, including CBAM and all. And if terms in CBAM is attractive, we may produce major part of it as green steel and export. So right now we are keeping fingers crossed, but it will have features which nobody has in the country, and hence it has very little to do with the group companies. It will be largely non-group companies.
Okay, so it'll be predominantly for exports?
It depends how the things unfold. If it is the CBAM terms are favorable, then we can start manufacturing green steel and start exporting. And even otherwise, we'll be able to export.
Mr. Goyal, just want to understand, sorry we need to come back to this, but it appears like a big development. So as you told Sonia, 60-65% will be debt. Of this 11,750 crores, 60-65% will be debt?
No, let's, as I mentioned earlier, let's talk about the specialty steel and auto cluster first.
Okay.
I'm not talking of the titanium part. How we
Okay,
will
so the
fund-
specialty steel, sir, specialty steel is around 6,600. Out of that
it is not only
60-65
specialty steel. Sorry, it is with the auto cluster.
Yes, with auto cluster, sir. That entire thing is estimated at 6,600 crores, and the graphics will come up for our viewers on the screen as well. Out of that, 60-65% will be via debt, right? So you still have that, remaining around 2,500 to 3,000 crores. Now, that amount will be entirely equity, or some portion of that will be cash as well?
No, there are several things. One is for the auto cluster, there will be some other entities within group, without outside group, they'll be ready to invest. Number two, there will be certain other benefits which will be available, right? For the auto cluster and all. So I think with that 4 years of profits and the current cash available, we will have adequate funds available for setting up our portion of the project.
Okay, no, but the reason I ask you is your market cap now is around 3,500 crores. Even if you even if you raise 1,000 crores via the equity route, it will be a big dilution.
No, we have not really worked out, and I don't think we are thinking in that direction. We are not thinking in that direction.
You're not thinking. So the equity component could be how much, sir?
We are still working out, as I mentioned, roughly indication I have told you, and we will find a way to fund it.
I think in the next couple of months, then it'll be interesting to see developments because on Kaminini Steel as well as on this, capex will require further details. But I think one thing that you can tell us is on the pricing front for your core business as of now. The last time we chatted, you said 20% had agreed on that price increase of 3,000 rupees per ton. What is the remaining 80%? Have they also come on board for this 3,000 rupee per ton increase?
It is at the final stage of negotiation, and we are very shortly going to close it, and we'll definitely get.
At 3,000 rupees?
It may be 3,000. You see, when you are in negotiation, you can't be very rigid that I'm going to get X amount, Y amount. And it is a negotiation with the industry. It is not with one single company.
All right, Mr. Goyal, you're keeping your cards very close to the chest. The last couple of interviews that we have had, we want to hear more about Kaminini Steel. And even today, me and my fellow anchors, we have tried to get out details with regard to this Odisha plant. You've given us broad details, but I think the next 2-3 months, we'll have to watch it very, very closely to get concrete details. But thanks so much for joining in here on CNBC-TV18.
Okay, thanks a lot for joining in, sir, and all the best. That's Kalyani Steel. But let's move on and talk about Zen Technologies. The company has bagged orders worth 93 crores from the Defence Ministry. To discuss more on this and their business outlook, Ashok Atluri, the Chairman and Managing Director at Zen Tech, is with us. Mr. Atluri, thanks a lot for joining in. If you can just tell us, what is the total amount of orders that you have received from the Ministry of Defence so far? What are you looking at in terms of execution over the next 12 to 18 months? And what are the new orders that you've bagged in this quarter, in Q4 so far?
This year we still, we're hoping that we'll complete the 450 order that we have projected to the shareholders. And next year, again, we are thinking that we will do 900 crores. And at present, the total order book position is about 1,500 crores. And the recent order that we received was for about 93 crores. And this was for a very, very important aspect of training, which is basically tactical training. Most of the orders that we have been getting till now are related to technical training, but not for actual warfare kind of preparation. And this is a big order for us. And we assume that this will scale up significantly as we go into the future.
Okay. So 1,500 crore is your order book currently, and you're saying that 450 crores of orders will be completed in this year, and you're targeting 900 crores in the next year. As you said, this space that you're operating in, tactical training, is a very, very niche space. So can you tell us what is the potential that you're seeing here, growth in this space over the next, say, 1 to 2 years? What are we looking at in terms of the opportunity size? And how do you think, are there any gaps that need to be filled from the government's end, etc.? Any challenges that you're facing currently?
Government has been very aggressive in terms of, simulator. As the Chief of Army Staff also has told on multiple occasions that they have started the journey for simulators, and it is just the beginning. So we think a lot of orders will come from them. And they, as you can see, the shift from, technical training, they're going aggressive, they're going more deeper, but they're also covering the tactical training aspect of it. We think that, it's at least a couple of thousand crores worth of opportunity just in India, and abroad it will be probably double of that. So this is a very huge opportunity for us in terms of our simulator complete range.
Okay, so if you're saying that couple of thousand crores worth of opportunity, you said earlier that you're targeting revenues of 1,000 crores in the next 5 years. Given what you've seen so far and the opportunity size, would you want to change that in any way, and any near-term targets that you can share with us? By the end of FY25, where do you see your revenues?
So FY25, it's going to be 900 crores. That's our expectation, and probably a little more than that. And we have said that it will be a CAGR of at least 50% thereafter for 26, 27, and 28.
Okay, all right. Hi, Mr. Tluri. Congratulations on this order win. A couple of quick questions about getting into an election year. How do your payments come in? Is it coming smoothly? Some part of it would be coming from the government of India as well. Any delays?
Nigel, I would like to say that, if anybody is claiming that there are delays in the army from the payment from the army, I would be really surprised, because we are getting our payment just on time before the 45th day, all the payments. If somebody is saying that, I'm getting this question a lot, but, we have never had any issue with payments when we have supplied the right item, whatever we have promised, and they have accepted it. So there have been debates during the acceptance that this is what they want. But once they accept and we present the bill is paid by the government within 45 days.
Okay, so that's good to hear. That's a niggling worry, right? Getting into elections, but you're clearing the air. There's no delay before the 45th day. The money is coming to Zen Technology, so your investors will be rather happy. The other question I had is, since you're saying there's such a huge scope, big potential out there, and the biggest problem for the company was the order book. Now that is ramping up, and that's why that's giving visibility. There could be larger players here in India, as well as overseas, that would like to partner with Zen Technologies. Have you received any kind of offers that, you have 55% stake in the company to dilute some equity, also be part of the company, maybe pump in some money? Have you received any offers?
No, we have not received any offers like that. And we definitely would like to partner where we don't have the capabilities and the foreign companies have the capabilities, or any other partner has a capability. We definitely would like to partner with them, as long as the end user, the Indian Armed Forces, benefit from it. So yes, we are exploring various options, but there is nothing close to any deal as of now.
Okay, and you'll be okay to dilute some equity?
Yeah, absolutely. I mean, it's on the larger interest for the country, you would do anything. Yeah.
Okay, all right. Can you tell us what could the R&D spends be over the next few years? What are we looking at?
So we have been spending about 15 to 20 crores last few years, and we expect that, it probably will go to about 30 to 40 crores as we go and expand our R&D scope. And, as we keep more acquisitions coming in, on Saturday, we announced another acquisition of a company called AI Turing. They are in the business of, electronic optics. They make cameras, and there was the only camera accepted by us in our portfolio of the anti-drone system. Anti-drone system typically consists of a jammer, detector, radar, and a camera. Camera we were trying to buy off the shelf, but we were very disappointed. There were a lot of claimants, but no deliverers. So this was the only company that delivered. And, when we said we would like to partner, they were very happy. So we acquired 51% of the company. And this company is into electronic optics and robotics. So we are very excited about this acquisition. So
any more acquisitions that you're looking at in the near future?
We are absolutely. I mean, we have taken a huge, pre-approval from our board and shareholders. So we think that there are going to be some acquisitions in the next 12 to 18 months space. Okay, and that would be in the same field, in the same space itself? Yeah, absolutely. I mean, it most probably will be in electronic warfare or anti-drone and simulation systems. Yeah, these are the two things which we are in. Yeah. Okay, all right. We'll let you go on that note. Thanks a lot for joining in. By the way, the market is under a bit of pressure now. The mid-cap index is down about 300 points. The bank nifty is down 120 points. Not looking that great. The nifty is holding on to 22,100, but by the skin of its teeth. Mitesh Thakkar is joining in now to tell us what to do. Mitesh, little bit of choppiness is coming into the markets now, led largely by some of these technology names. So Tech Mahindra, Wipro, TCS,
are all your top losers this morning. And of course, Asian Paints, which is down 4%. Any thoughts on how to approach it for the rest of the day?
So I think, we talked about this, that the market is now showing signs of consolidation. The key area for me on the Nifty is about 22,050. So another 40 or 50 points lower, I would want to see if a buy trade can be initiated. And then, keep a stop below 22,050 and maybe look at 22,250 as the first target area. So I think maybe a little bit more of dip, and I think I would want to take a long trade with a tight stop loss. And on the stock side, I have a buy on IRCTC, which I recommend buying with a stop below levels of 965 for targets of 1,025. And also a buy on Granules, which just made a fresh swing high. So Granules is a buy with a stop at 465 for targets of 493.
Got it. Mitesh, I wanted to ask you about the big boy HDFC Bank, because normally that's been the culprit, right? The market goes down means HDFC Bank has slipped. Now it's stabilizing. In fact, it's holding mildly in the green. And from that recent low that we saw, a couple of weeks ago at around, I think, 1,350, 1,370, it bounced back. What are the crucial support levels on HDFC Bank?
So Nigel, two observations. One, I think now it's showing signs of the decline coming to an end, but we don't have signals of an uptrend. So I think it'll be choppy. But as you rightly pointed out, a couple of weeks back, the stock made lows below 1,400. So around that level, 1380 was the, or 1385 was the lowest closing we got. I think that's the first important support area. I think around that level, if you get a chance to enter again, take a 25, 30 point stop loss and go long. Though it may not give you a big trend reversal, but a very strong bounce back given the fact that one, it's oversold, and two, it's now showing signs of decline coming to an end. I think it might just chop around. So that strong bounce back could happen from the previous low. And that could see the stock head towards 1475, 1480 zone. So try to buy below 1400 with a 30-point stop loss, and around 1480 try to take profits. A breakout above 1480 and we'll look at some kind of an up move.
Okay, thanks for that. Well, let's go across to Mangalam now. He's going to tell us about some of the paint companies. Of course, Asian Paints is your big loser, down about 4%, and some brokerage downgrades coming in, Mangalam.
Absolutely, with the kind of competitive intensity that the sector is likely to see after especially the launch announcement of Birla Opus, brokerages are a little circumspect on the multiples that paint companies are trading at. Case in point, the industry leader itself. So we have CLSA, which has downgraded Asian Paints to sell with a target price cut from 3,200 rupees to 2,425, which is actually the lowest target price on the street. They believe that because of the higher competitive intensity, there is case for the company's multiples to move back to its 15-year average. So currently, as per them, stocks trading at 66 times. They believe that it's likely to trade at around 43 times, and that is more like it. And Goldman Sachs also believes that, because they've lowered their target multiple from 58 times to 52 times, and they've cut their EPS estimates as well. They believe that the Birla Paint strategy is a lot more comprehensive than earlier assumed. We also have Macquarie's note coming in on the paint sector, where they believe that even though discounting levels may not rise, companies like Bazaar may be impacted by Grasim's entry into the paints foray, even as Asian Paints keeps its leadership. So as a result of which, we are seeing some nervousness in both Asian Paints and Bazaar.
Okay, some nervousness in Asian Paints and Bazaar, but Rain Industries is also on our radar. Sonal is here to tell us more about that. Sonal, over to you.
Well, Rain Industries is lower because of a weak set of quarter 4 numbers for calendar year 2023 that the company has reported. Revenues declined 1.5%. There was an EBITDA loss this time around of 613 crore rupees versus EBITDA last quarter of 366 crore rupees. This has resulted in a loss of 1,078 crore rupees versus a loss of 66 crore rupees. This is on a quarter-on-quarter basis. Now, there are two reasons for losses to be so much higher. One, the tax has increased to 995 crore rupees versus 462 crore rupees. And second, the company has taken an impairment loss, and it's a big one. It is around 751 crore rupees in quarter 4. But if we strip that as well, it will be a higher loss on a sequential basis. The company goes on to say that there are two segments. First one, which is the carbon segment, which was impacted due to delayed shipments and also margin contraction. The second one is advanced materials, which was impacted because of seasonal factors. So these two did not do well. However, the cement business did well because of better volumes and realizations. But yes, it's a top-down miss, and that's why a sharp knock on the stock today.
All right, Sonal, thanks very much for that. That's Rain with the sharp knock, as Sonal points out. We'll take a quick commercial break here. We'll come back, and Manisha joins in, as always, to put the focus on commodity markets. Stay with us.
GPT Healthcare.
Well, shifting focus to the commodity markets, Manisha Gupta is joining in. Manisha, what's the one commodity you're tracking today?
Well, I'm looking at the metals as a sector, and last week was a positive one, but an outperformance clearly came in from nickel as a metal. It has seen a 3-month highs. That's where it's trading right now. It gained 7% in the previous week, and this has been the biggest weekly gain that nickel has seen in last 7 months as well. It clearly has been an underperformer in the previous year as well, where we saw 23% of a decline come in for nickel. But for the current year now, it seems to be turning positive as we see it. If you look at the price movement, and this is what we've done in this year until now, 1st of Jan was $16,300 a ton. We did see a decline by mid of Feb to almost $15,600 as well. But currently it's trading at $17,300. So nearly $2,000 of a jump up in the month of Feb from the lows that we saw in this current month itself. Well, the positives clearly seem to be coming in from the US announcing 500 or more new sanctions now on Russia. Now, copper and aluminum are not on that list. Nickel perhaps is, and that is what has led to a lot of short covering coming in from funds. And that is what has triggered this run up that we've seen in case of nickel prices. Apart from that, Australia also has rolled out stimulus measures and has added the nickel to a critical mineral list that happened in the previous month as well. That continues to be a supportive factor also. We're looking at lower inventories being in Australia. That has been supportive. Apart from that, it is about Indonesia mining quota approval that has continued to be quite slow. Even as they've taken much of the curbs off, the approval continues to come in slow, and that has been a bit of a botheration, adding premium to those prices there. The only thing that is keeping the prices in check right now is that there's an expectation that in 2024 you could see a supply surplus of 239,000 tons. But the markets also are looking at stimulus measures coming in from China, the steel production and demand on the higher side, the EV demand slightly higher as well. And nickel is a major ingredient, and that is where the support also seems to be seeping in.
All right, Manisha, thanks very much for that. So that's commodities in focus. More later. We'll take a quick commercial break here. On the other side, a special segment. It's the economy. My colleague Lata will get chatting with Mr. K. Srikumar, Senior Vice President and Co-Head Corporate Ratings at ICRA. Rajesh Magao is co-founder and group CEO at Make My Trip. And they talk about how the tourism industry will shape up in FY25. Stay tuned.
Brought to you by